In 2026, simplicity is not a nice to have, it's the main trigger. The waves of hype in crypto have faded. Investors have matured. They are no longer chasing a moonshot dream, instead, they want stability. If you can't explain where the returns come from in few sentences, people turn away. Hello and welcome. Over the last 2 years, investors have done one simple thing. They got tired of emotions. Hype became expensive, volatility became exhausting, and a lot of smart strategies started sounding better than they actually performed. Today, the demand has shifted towards income you can explain in one sentence. Who pays, what they pay from, and when they pay. People used to chase hype and panic. Now they are searching for stability. Investors are tired of wild swings and emotional decisions. They want something predictable. Central banks are hinting at softer monetary policy. That means they are more likely to make borrowing easier, which is the backdrop for all fixed income products. At the same time, DeFi is coming back to life, and people are asking for straightforward income. They don't want complicated products. If you can't explain where the returns come from in few sentences, people turn away. This change in mindset sets the stage for everything we're about to discuss. Let's start with the current state of peer-to-peer lending. The market has matured a lot. Over the past couple of years, unstable players have left. The platforms that remain are stronger and more responsible. Investors no longer want uncertainty. They now pick tools that offer predictable returns and clear explanations. In Europe, regulations have raised the bar. Standards are higher and there is more transparency. This is good for investors. It means the P2P space is safer and more professional. For small and medium-sized businesses, peer-to-peer lending has become a real alternative to bank loans. When traditional financing is expensive, P2P can fill the gap. Overall, peer-to-peer lending has transformed from a risky bet into a calm, fixed income instrument. It's no longer about let's try and see if we get lucky. It's about steady, reliable income. Our first prediction is that simple fixed income products will dominate. We live in a complex world. People are overloaded with complicated products, complex risks, and confusing interfaces. Investors are tired of products that take a finance degree to understand. They want straightforward solutions. The products that win are the ones with a clear, simple journey. You invest your money, you receive a fixed payout, and you know exactly when that payout comes. That's it. Peer-to-peer lending fits this story perfectly. It offers a simple process, a transparent way of allocating capital and clear risks. In 2026, simplicity is not a nice to have, it's the main trigger. As the saying goes, complex products get tired of selling themselves. Simple products sell on their logic. We're going to see more and more investors choosing products they can explain easily. When something is easy to understand, it inspires trust. When it's too complicated, people walk away. Our second prediction is that institutional investors will play a much bigger role. Professional capital is looking for alternatives. Bonds yield little, and the stock market is still nervous. Large investors like pension funds and asset managers need stable income in this environment. That's where peer-to-peer lending and other real-world yield products come in. Institutional investors demand high standards. They want strict credit scoring, predictable deal pipelines, and mature communication. When they enter the market, they raise the quality for everyone. Platforms become more professional because institutions won't invest without clear risk management. It's important to note that institutions aren't pushing out retail investors. Instead, both groups can coexist. Together, they build a strong foundation. When big players come in, they bring stability, and that benefits everyone. Our third prediction is about interest rates and how they affect capital flows. When rates go down, bank deposits lose their attraction. People are no longer happy with leaving money in the bank when it earns a little, so they start looking for other options, something with moderate but stable returns. Peer-to-peer lending is well positioned here. Returns in P2P don't move up and down as quickly as bank rates. They react with a lag. So even when the general rate environment falls, P2P can continue to offer steady income. That makes it very appealing. In 2026, we expect this to be a powerful driver of new capital flowing into the P2P space. Now let's shift to crypto and decentralized finance. The waves of hype in crypto have faded. Investors have matured. They are no longer chasing a moonshot dream. Instead, they want stability. In DeFi, there is growing demand for on-chain fixed income, that is, income generated by real off-chain assets or credit models, but delivered through blockchain infrastructure. What do people want here? They want simple products. They want transparent, smart contracts. They want to know where the income comes from, and they don't want wild volatility. This mirrors what we see in traditional finance. This is a direct bridge between crypto and peer-to-peer lending. Both worlds are converging on the same idea. Predictable, reasonable income is more valuable than flashy, risky returns. As one line sums it up, Web 2 and Web 3 have unexpectedly arrived at the same idea. Reasonable, predictable returns matter more than shiny ones. In the years ahead, we will see more on-chain fixed income products that mirror traditional lending, but with the advantages of blockchain technology. Let's talk about Mcclear. Mcclear is a Swiss-regulated P2P lending platform that offers fixed income through real SME loans. It's for people who want stability without the roller coaster ride of volatility. Mcclear's foundation is strong. It values transparency, clear communication, mature processes, and experience with real loans. Its approach aligns perfectly with the themes of 2026: simplicity, predictability, trust, and steady growth. One of the most important points: Mcclear and Adlance are not competitors. They complement each other. Think of them as different sides of the same coin. Mcclear provides stable off-chain income. Adlance offers on-chain access to stable income. Together, they meet the needs of different investor segments. Some people prefer the familiarity of a traditional platform. Others want the speed and transparency of blockchain. Between them, Mcclear and Adlance cover all bases. Now, let's look at Adlance. Adlance is an on-chain fixed income platform. It's important to clarify what that means. It's not about creating RWA tokens or tokenizing assets. The returns at Adlance come from real off-chain credit products. The Web3 layer is used as infrastructure. It automates calculations, makes transactions transparent, and makes it easy for the Web3 audience to participate. This makes Adlance a bridge between real-world lending and crypto investors. You might explain it like this: Adlance is an off-chain income in Web3 format. It's not tokenizing a business or putting bonds on a blockchain. It's providing on-chain access to real fixed income. This approach fits perfectly with the 2026 trend: mature Web3 products that focus on stability and reliability instead of high-risk experiments. Let's wrap up with some closing thoughts. 2026 looks like a year where investors choose discipline over dreams. Clearer risk, clearer income. The need for stability becomes stronger than the thirst for quick profits. Peer-to-peer lending and on-chain fixed income will become key tools for new type of conservative investor. These investors will build hybrid portfolios. They might put part of their capital in Mcclear, where they get off-chain stability, and part in Adlance, where they get on-chain efficiency and transparency. This isn't a speculative wave, it's a sign of the financial market growing up. Remember the phrase, 2026 is the year when simplicity becomes strength again. Investors choose instruments where they can earn and also sleep peacefully. Stable income is back in style. Please subscribe to our channels to learn more about it. Thank you for watching. I hope this overview helps you to understand where the market is heading and how Mcclear fits into the bigger picture. Stay tuned for more updates as we move into this exciting chapter.